Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now if you are ready to elevate your Forex game, today's topic is for you. Alright, we are going to be diving deep into tick scalping Forex. It's a fast paced and dynamic trading strategy, okay? And this is one strategy that focuses on capturing small price movements. All right, so by the end of this video, you'll have actionable steps to apply this strategy effectively. Okay, now we're just going to be starting with the basics. What exactly is tick scalping in Forex? Now, in simple terms, tick scalping is a trading approach where you capitalize on minute price changes. Now, when I talk about minute price changes, I'm referring to price changes that occur every minute. In fact, it could even be less than a minute. All right, we're talking about just a few pips here and there. Right now, this strategy relies on tick charts, which display price movements for every trade executed rather than over a set time frame. All right, now tick scalping is all about precision and speed. Right, for example, if you are a scalper, you can see that I'm on the 1 minute chart, and let's assume that you want to scalp in the direction of the trend, or in fact you want to scalp both in the direction of the trend and against the trend, right? So having identified this as a bullish trend, this is the 1 minute chart, right? Now a scalper would want to take advantage of the impulse moves, the corrective moves, impulse moves, corrective moves, impulse move, and so on. Right, you literally want to grab every opportunity that you can find. Okay, now there are some scalpers that might open tens of trades in a single day. Some might open as much as hundreds. Right, it depends on the kind of trader. If you are a kind of scalper that has the strength, yeah, and the time to stay focused on your charts, opening multiple trades at a time, it's possible to literally open hundreds of trades in a single day. For example, if you were to ride this trend, let us just do a quick calculation right here. You can see that this started around 10, let's say 10:37, up until 12:09, right? So if you are a scalper with a sizable account balance, all right, a sizable account balance, you can literally decide to use the smallest lot size, which is 0.01. Let's take, for instance, you have $1,000 as your account balance and you want to scalp, but you want to apply a level of risk management, right? So you can decide to use the smallest lot size being 0.01, but open multiple trades, right? So you can decide to enter a position around here right as there was bullish momentum. You can decide to open a buy trade here, another buy trade, another buy trade, another buy trade, perhaps a series of buy trades, perhaps 3 to 5 buy trades at different price levels, just in case of if the price keeps on going down. The first buy trade could be around here. Then if there was a dip, you could enter another. Some traders usually set a lot of limit orders, right? So you might literally have about 5 buy trades around here at different price points. Then once you notice that a reversal is about to happen, you could open a couple of sell trades as well and write it down, and then open a couple of buy trades. So you might be having 5 trades. It's just an example, right? You might be having 5 positions per move. So let's do a quick calculation. If you have 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, right? 75, 80. So you already have, within the space of how many hours? Within the space of 10:37 until 12:37, in the space of 2 hours, you already open about 80 positions within the space of 2 hours. So imagine trading for like 5 hours, right? So this is just an example. Actually, different scalpers might have different methods, different techniques for opening or executing their trades. Basically, the tick scalping strategy is for scalpers, right? But if you're a kind of scalper that prefers to open a single trade per move, right? You can decide to enter just one trade, you open one position, and you ride the impulsive move, and you open one position to ride the corrective move, you open another one position to ride the impulsive move, and all of that, right, continuously. Okay, so that is also fine. But whichever method you use, whether opening multiple trades or opening a single position per move, you have to also observe good risk management. All right. So, for example, if your entry signal was to ensure a bullish candle had formed, and then you enter your position, if the reason for entering that trade has been nullified, then ideally you should exit the trade. All right. So it's important to observe good risk management, whether you open in multiple positions or a single position. Now, basically, tick scalping works by targeting rapid price fluctuations, often within seconds or minutes, right? Instead of using standard time-based charts, you focus on tick charts, okay? Because these charts give you real-time price action, making them ideal for spotting micro trends, okay? Now, but because of this fast pace, you'll need to act quickly and make decisions based on razor sharp analysis. All right. Now let's talk tools. Okay. Tick scalping requires precision, and that means having the right setup. Here are a few must-haves. All right. Now it's very important to have a reliable broker. All right. You need a broker with low spreads and fast execution speeds. Okay. Even a slight delay can impact your results. Now, secondly, tick charts. Okay, you can use platforms like MetaTrader. This is the MetaTrader 4 platform. Okay, you can use MetaTrader, you can use TradingView, or you can use NinjaTrader. Any platform of your choice to access tick charts. Okay, now this allows you to monitor each price movement in real time. Okay, now finally, popular indicators for tick scalping include moving averages, Bollinger Bands, and RSI. You can decide to add indicators, technical indicators on your chart if you wish. All right, they can help you to identify entry and exit points quickly. Okay, for example, you can actually decide to combine the 20 period moving average. I'm just going to add the 20 EMA to the chart. You can decide to combine it with the Bollinger Bands. All right, I'm just going to add the Bollinger Bands to the chart real quick. Okay, you can decide to combine it with the Bollinger Bands to spot short-term price breakouts. All right, for example, let us see, we're looking for short-term price breakouts, right? We can see that initially we were in a bullish trend. Right around here, we had a bullish trend. Let me just extend this trend line. Okay, we had a bullish trend, right? And then somewhere around this point, can you see that we had a breakout? We had a breakout somewhere around here, right? We had a breakout. And you can see that both the moving average and the Bollinger Band served as confirmation tools for this breakout. Can you see that right after the price dropped below the trend line support, you can see that about the same time, the moving average curved downwards, and we can see that the price dropped below the moving average, and the price also dropped to the lower boundary of the Bollinger Bands, below the middle line of the Bollinger Band. So those were confirmations of the breakout. Okay, and you can also decide to add your RSI. If you want to have multiple confirmations, actually, you can decide to add your RSI to the chart. The RSI can give you alerts to overbought or oversold conditions, signaling potential reversals. Now you can see even around the time of the breakout, you can see that the RSI dropped below the 50 level. All right, and that was an indication of bearish momentum. Okay, now here are some pro tips to help you master tick scalping. First, you need to start small. Okay, begin with a demo account or small lot sizes until you are confident in your strategy. All right, now secondly, you need to set clear targets. Okay, decide on your profit targets and stop loss levels before entering any trade. All right, a typical scalper looks for gains of just a few pips per trade. Okay, and thirdly, you need to manage your risk. Right, never risk more than 1 to 2% of your trading account on a single trade. Okay, scalping involves frequent trades, so proper risk management is key. All right, and then finally, you need to stay focused. Okay, Tick scalping requires constant attention to the charts. Okay, so distractions can cost you valuable opportunities. Now remember, this strategy isn't about hitting home runs, it's about consistent base hits that add up over time. Now let's quickly cover some common mistakes you want to avoid. So first of all, you need to avoid over trading. All right, scalping is fast, but that doesn't mean you should jump into every movement. Okay, so you have to be selective with your trades. And secondly, you need to ignore spreads and fees. Sorry, I mean ignoring spread and fees is a mistake that you should avoid. Okay, do not ignore spreads and fees. That is what I mean. High spreads and commissions can actually eat into your profits, especially when scalping. All right, so you need to choose a broker that offers competitive rates. And finally, emotional trading. It's one thing you should avoid. All right, the fast pace of scalping can trigger emotions like greed or fear. So you have to stick to your plan and don't let emotions take control. All right, so basically, tick scalping is an incredible way to take advantage of micro price movements, but it's not for the faint-hearted. Okay, with the right tools, a solid strategy, and disciplined execution, you can make this technique work for you. So if you found this video helpful, don't forget to smash that like button and subscribe for more actionable trading strategies. Hit the notification bell so you never miss an update. Let me know in the comments if you've tried tick scalping or if you have questions about this strategy. Thank you for watching, and I'll see you in the next video.